So I thought I'd share my experience with trading and investing over the last, I want to say 7 years. I went through like a lot of, I went through a lot of phases or tried different things, including investing in, starting off by trading Australian stocks and then trying to buy and ride trends. Like for example, uh, in the early years, I remember I was trying to catch the lithium boom, or the when it became very trendy. And as with most trends, when it starts to trend, often the news, or if you don't have enough information about the trend, then chances are you're probably late to it, which means that you're probably going to be disadvantaged in the sense that many investors have already positioned very early on, and you end up being, I don't want to say exit liquidity, but you're more likely or more susceptible to selling your stocks when the market turns around. So what often what often happens is you will very quickly go into profit as momentum continues to ride the trend, and more people like yourself start to see videos and start to see news that goes through the major publications, and you see a lot of momentum build until it reaches a climax, and from there what you see is there's a major sell-off. So I kept finding myself in this pattern where I would get into stocks, I would be up, and I would sometimes even buy more parcels or more of the same stock, thinking that I was onto a winner, only to find out later that I would quickly be in the negative, and I wouldn't cut my positions, and I wouldn't follow the common advice, let your winners run and cut your losers short. Instead, I found myself losing and holding on to positions, hoping that things would turn back around. So that was mistake number one. And one thing I wish I knew when I started this was most people lose money when they first get into the stock market, and 95% of people aren't profitable until sort of 5, 6 years in the market and taking the time to educate themselves and going through the pattern recognition and seeing that what they're doing isn't working, and then going back with a better strategy or doing more research or thinking twice before positioning. And the advice I would give myself if I was starting out today would be to acknowledge that it's going to take 5 or 6 years. It's going to be a longer endeavor, to have a longer term outlook, and to dabble with trading, knowing that I'll probably will take some time to develop the skills before I become profitable. And in the meantime, minimize the amount that I'm going to lose, because I can learn by having skin in the game but not having major losses. So what I would have done instead is invest into ETFs. So if you go onto the Australian subreddits like financial independent, financial independence, financial independent Australia, or FI Australia, and there's Bogleheads and a few other ones that are big proponents of just passive investing, so buying into index funds such as the Vanguard Beta Share, or like BlackRock equivalents, where you're investing into a basket of stocks, ETFs that represent either Australian stocks only, but now there's a lot of access to a lot of the Australian brokerages allow you to buy overseas ETFs as well, or equivalents. So what I would recommend now is to buy Vanguard VAS, which gives you exposure to the Australian 200 or so largest stocks, I believe, and then also invest in VGS, which is the equivalent of international shares, and that mostly covers most of the broader US market, including some other international markets as well. But for the most part, it covers the US. It's just a little bit more diversified because it includes 3,000 companies rather than just the 500 US companies. But it tracks pretty similarly to the US stocks. And this is what I would put 80 to 90% of my money into, and then have maybe 10 or 20% that is there for like in cash equivalents, so that I could feel like I've got the psychological safety and be able to average into my positions when there are sort of those 10% to 15% corrections that are inevitable, or if there's one of the larger ones like we've seen through COVID. That would be a great time to be on the attack and deploy the additional safety net that you or like additional cash that you've got on the side there, and ride out those tough times. And then in those 6 or 7 years, just learn trading, learn technical analysis, try to find your edge, back test your strategies, start getting into the good habits of trading journals and that sort of thing. But yeah, that would be the biggest thing that I would change in the advice I would give myself if